For that, gold financiers aren't the only ones which are benefiting from higher gold prices. If you just take a look at the jewelry stocks, and they've been a buzz for so many days. You look at Kalyan Jewellers. Yesterday, there was a positive brokerage note coming in. Today as well, there was a positive brokerage note coming in. Senco Gold is up. Even some of the lower rung jewelry stocks, case in point, something like a TBZ, which is up 18%. It's doubled in this year itself, more than doubled, 1.5 times in this year. Moti Sons Jewellers is up around 6% as well. There are multiple reasons for these stocks to be gaining, and let's talk about each of them in particular. There have been positive brokerage notes on Kalyan Jewellers yesterday as well as today, and the street is increasing their growth outlook. Despite an 8x move that we've seen in Kalyan Jewellers stock price over the last 2 years, the street believes there is room for more growth, especially Titan's template is something that everyone's looking at in terms of them following. Secondly, for the entire pack, there is improved outlook for demand in the second half ahead of festive and wedding season as well. And then there is accelerated formalization in the gold segment due to duty reduction in the budget. So all these factors playing up for the jewelry space. In particular, for regional only players, the likes of Senco, Moti Sons, etc., P.N. Gadgil Jewellers IPO is something that, the street is taking note of, and maybe some valuation rub-off taking place out there as well. And finally, higher gold prices. How do higher gold prices help gold companies? Typically, a lot of the lower rung companies have a larger proportion of their gold which is unhedged. So every time the gold prices rise, they do make some sort of inventory gains out there. The formal bigger players, the likes of Titan, have over 100% of their gold hedged. Senco has about 89-90% of their gold hedged as well, and Mangalam Maloo has about 89 to 90% of their gold hedged. So even if they have 89 to 90%, 10% of their unhedged inventory stands to benefit from increased gold prices. And for other players, one's sense is that it would be a lot more than just 10% which would be unhedged. So as a result of which, higher gold prices would mean better inventory gains and better margins coming in for them. And that's exactly what the street is betting on, and explains why some of these names, especially the lower rung ones, are doing extremely well.
Okay, all right, Mangalam. Thanks very much for that. So that's the entire gold financiers and jewelry space which is in focus in today's trading session. We need to take a short break, but we'll get you a rare and exclusive excerpts from our conversation with the management of Trent on their growth and expansion plans. Stay tuned.